oil markets have been rocked by weaker demand, bringing lower sales and instability, particularly in the MENA region. Now, what's next for the industry? Dr. Sara Vakhshouri joins me with her thoughts. Now, you were a consultant at the National Iranian Oil Company, as well as others in the MENA region. Tell me, how is it as a whole handling all of this market instability?
At this point, that since middle of last year, we're dealing with nearly 60% of price drop. The prices of crude oil have dropped from above $100 to nearly to the range of $50, $60. Of course, there's going to be consequences for these countries. Their budgets, their national budgets are mainly heavily depend on their oil revenue. So, of course, there's going to be less sources for these countries. However, something that is very important, and I want to draw your attention, is the cost of production in these countries. For instance, in Iran or other producers of Persian Gulf, cost of producing 1 barrel of crude oil is between $2 to $5 or $7. If you add production maintenance cost, it's going to reach the maximum $10. So still selling crude oil for $50, they're going to have a huge profit on each barrel of crude oil.
As these combinations evolve and we talk about sort of OPEC's role in the next decade, has OPEC seen its day?
We have countries like Iran, Libya, and Iraq that they have been producing below their OPEC quota. And at this point, we have mainly Iran that, because of 2012 sanctions on its oil export, it has been producing and exporting below its OPEC quota. And the whole market are expecting that the sanctions on crude oil export are going to lift. And an Iranian oil minister announced that he's ready. Already, he announced and he ordered to all of the oil fields to increase their production, and they're ready to increase their export level immediately. So any extra export coming from these countries, particularly Iran at this point, is going to have more downward pressure on the oil prices. And then here the conflict starts again in the OPEC, that if Iran is going to argue that Saudi Arabia mainly substitute its crude oil export cuts due to the sanctions, it's Saudi's responsibility to open the market share for Iran and let Iran to produce. If not, Iran is going to still produce and export to its maximum level that it can. And then here is that conflict is going to be intense in the OPEC, because Iran is, of course, see its own right to increase its production to a pre-sanction level, its OPEC quota, and we have Saudi from the other side that does not agree to reduce its production, and it's arguing that now the realities of the market is changed and countries have to defend their market share.
And now, frankly, its capital markets are opening up as sort of a positive byproduct of these negotiations. So tell me about the great gains from the capital markets perspective do you see happening, and that are really going to have an impact on, the OPEC relationship?
It's going to have a great impact, of course, because not only many people, of course, the investors in the market, hedge funders, are thinking that when the actual production of Iranian oil is coming into the market, the extra production rebounds. Something that is very important is that Iran already has nearly 40 million barrels of crude oil on the sea, and they can release it immediately. And Iran's current clients and consumers of crude oil, which they have authorities from U.S. State Department, can slightly increase their imports from Iran. So Iran could immediately release this floating storage of oil into the market. And also on the other side, many expect by the end of this year, middle of next year, their production is going to rebound. Our expectations and our forecast is up to 800,000 barrels per day by mid-2016. So all of this, of course, is going to affect on the prices, crude oil prices. On the investment side, of course, Iranian market is going to be again open for investment in its oil and gas industry. Iran is at this current moment one of the very limited countries that have a huge amount of oil resources that is relatively simple to extract and very low cost. Also, it has huge gas reserves. So it's going to be a very interesting place for international investors. And as you may know, they have revised their investment regulations. They're introduced new type of upstream investment contracts that is going to be more attractive for the investors. So we are talking to many oil companies, and we see that interest for going back and investing in Iranian energy market.
Dr. Sara, we're still talking about a frontier marketplace in many ways, right? It's just opened up. So the infancy of all of these projects and developments and investment opportunities is just that, infancy. So how would you characterize the next decade for the capital markets in Iran?
I agree that things are not going to be super fast, and we are not going to see a significant production capacity raise in Iran soon. But I would see that if the sanctions are removed and if Iran comply with the nuclear deal, its production is going to rise in the next decade.
Okay, now let's shift the conversation to some of the Middle Eastern sovereign wealth funds. The Arabian Gulf funds, for instance, have begun increasing their transactional volume to make up for the market slump where we sit at present day. So in terms of diversification, would you say that the best way forward is to look at some of the other industries where they could really reap gains as, oil starts to slow down? Qatar Investment Authority, for instance, currently investing into healthcare, infrastructure, and property. Is this a replicable investment model for the other MENA neighbors?
Absolutely, especially that, as you mentioned, the next decade is not expected that the crude oil prices are going to rise massively. So investing in crude oil or oil related funds is not going to have good prospects at least at this moment, because we are expecting additional oil to be added. Iran, if Libya's problem solved, we were discussing earlier, there's going to be additional production. Iraq is going to have additional production. We have Mexico that undergone a massive energy reform and is expected to attract investors. So to diversifying this investment fund and looking for new investment opportunities to other areas than oil and energy, of course, it's a wise decision.